The fiscal cliff, it's a term coined to refer to a number of laws that are set to expire on December 31st. Now, if Congress doesn't act, it would mean automatic tax increases for everyone and deep spending cuts that could send this country into another recession. Among them, the expiration of the Bush-era tax cuts on income investments, married couples and families with children, and inheritances. Also set to expire, last year's temporary payroll tax cuts. And that would mean a 2% tax increase for workers. One major sticking point here is President Obama and members of Congress don't agree on who should be taxed. The president wants to raise taxes on families making $250,000 a year or more, but Republicans say no.
Modest tax increase on the wealthy is not going to break their backs. They'll still be wealthy.
The issue there is we are not going to hurt our economy and make job creation more difficult, which is exactly what that plan would do. It's not the direction that we want to go, because it's going to hurt job creators in America.
And that difference of opinion could leave all of us paying more. So what do you do if you're an investor or just an average Joe trying to get by? Background Brandon Lewis took that question to the experts.
Volatility continues on Wall Street this week as the markets continue to swing from the looming fiscal cliff.
I think investors are going to kind of have to hunker down, but I would really encourage people to not make knee-jerk reactions or try to make significant moves to their portfolios, particularly if you're a long-term investor.
But exactly what hunkering down means depends largely on the investor. Financial planners were mixed about how they see this playing out.
Generally, we are taking a larger cash position. We are going into more defensive type positions.
I'm just telling them to, we have an investment plan for them, and I'm telling them to stick to their investment plan.
A lot of it depends on how much risk you want to take. Meanwhile, in Washington, Congress remains stalled on an agreement.
I'm not quite sure Congress realizes just what an impact it has on the economy and the stock markets. And, that all of that trickles down to the consumer, because many consumers are investing in the market, and they do see, and they use it as an indication of the health of the economy.
Even if you don't directly invest in stocks, it's likely you'll also feel the pinch as we near the edge of the fiscal cliff.
You're talking about everyone being impacted, even those that aren't invested. 401ks, IRAs, 403bs, all these other programs will also be affected by the outcome of the economy and also the markets.
The one thing all planners agreed on is the quicker Congress acts, the quicker the markets will stabilize. Until then, the swings may become the norm. Brandon Lewis, CBS 6 News, Schenectady.